Hey guys, Mike here. So in today's video, I'm going to take you through a chart over the last 10 years of the NASDAQ in particular and show you how good April has been to the stock market, okay? And I picked the NASDAQ obviously because I have a lot of high growth stocks. A lot of people watch this channel have high growth stocks, but I also will back it up with a couple other charts showing the Dow as well and stuff like that. So, and then at the end, I'm just going to go over 4 stocks I think would be good buys in April. Couple recovery stocks, a blue chip stock, and then a high growth stock. So kind of mix them all in for you, and I think they'll do well. So I think you'll like it. And if you get anything out of it, as usual, please hit that like and subscribe button. It really helps me out here. And if you want to come join the family, you can hit the 99-cent membership down below. Just hit the join button or the link. And I just added a private Discord in there as well as one of the 3 perks. And so I think you definitely will get your 99 cents worth. And so I got a lot of good feedback on that today. So I was happy to hear that. And without further ado, you know me, let's get into it. And so I went ahead and calculated these numbers up myself and looked at this for April. And so I went back to 2010, obviously because in 2008 we had the crash. So we were going down through 2008, 2009. And so I didn't count 2009 in there for a reason. I also didn't count 2020 because we were also coming out of a crash in 2020. And so April was, just straight up. And so I went from 2010 to 2019. And so we get 10 years here on the NASDAQ. And so if you see here the positive, we got 2.5% in 2010, 2.7% in 2011, went down about 1.2% in 2012, up 1.8% in April of 2013, minus 2.4% in 2014, up 1% in 2015, up 2.6 or down 2.6% in 2016, and then we get 3 more positive years here, 2.2, 0.6, and then 3.8 in 2019. And so if you notice, we're talking about out of those last 10 years, that is 7 positive years out of 10. I believe that's 4 positive years out of the last 5. And so April's a pretty good month. People speculate a lot of reasons for this, that, we're obviously coming out of Easter, so you got the Easter rally, people getting their refund checks back from the IRS, things like that, so more money to flow in. And so there's just a whole lot of reasons for it. But it's been a pretty darn good month. Some people say it's the best month out of the year for stocks. Some people I've seen source where it says the second best month. So whether it's number 1 or number 2, it's still looking good, okay? So obviously we're in a different stock market right now. We shall see what this April brings. So far it's starting off really well, as you saw today, and actually it started yesterday. And now we'll close down tomorrow for Easter, but come Monday we'll see if that continues. And just to kind of touch on the other ones here, and so if you look right here, this is the Dow for the last 55 years. As you can see, here's April. April is the only month to ever break 2%. As you can tell, it's usually way above the rest of them. So that's the return on the Dow you get, broken down by months, and April obviously is number 1 on that. And then if we look at when you get your best returns, this is on the S&P from 1950 to 2020. And you can see April was a strong month for stocks historically right here, as the chart says. And it's usually the first 18 days where you actually see this big growth, and then it trades sideways. But so this is on the S&P and what you've seen happen in the month of April as well. And so, it's a good month for all the indexes, it seems. Obviously, the S&P just broke 4,000 for the first time today, so I won't lie and say that's what got some people nervous. I'm talking about big-time investors. When you see those indexes hitting all-time highs and the Dow, I don't think it's far off of it. What usually happens, they're correct. Was it happened 3 times in the last 7 months for the NASDAQ where it's done a major correction when it hit an all-time high? And so that's what got people nervous in April. Here they're hoping that there's not going to be a 10% sell-off on both of those as well because they're running hot right now. And so, hopefully this is what holds up, and we shall see, of course. Nobody can predict in a crystal ball what's going to happen. But according to history, it's plain as day, this is supposed to be a good month. And so now what I want to do is just touch on basically 4 stocks that, to me, I'm buying. And so, they have different reasons for that, which I'll explain. I've touched on some of these stocks before. And the good thing is it's stocks you should know. And so the first one is just a straight up Easter play. Walmart always does well after Easter normally. And you can see it's obviously sold off quite a bit from 151 on down here. But I mean, if you just go back to 2019, you can see it ran up right here after Easter. If we go back here, it did a nice run up after here after Easter. If you got 2017, it ran up after Easter. And so just normally Walmart, I don't have to go and tell you who Walmart is, you know who they are and stuff. They normally just run up after Easter and into April and stuff. And so that's when they usually do their run. And so I bought a few shares of it. And so I'm going to try to see if I can get a little money out of that one. This is not a long-term play for me at all. But it tends to run good for a good, 2 to 3 months. Doing a run up, so I don't mind holding it, and then we'll see what happens from there. It really just depends on what the stock market is in 3 months. If growth stocks are taking back off, I'll probably rotate out into a growth stock, but for right now, I'm going to hold some shares on this one and try to make a gain on it. And a high growth stock I'm also getting into, which I've talked about before, which has been on a nice run over the last 5 days, is Pinterest. And obviously I've done a detailed video on this, and I compared it to Snapchat, and I'll put that video at the end for you. But it's up 12% over the last 5 days. I talked about this, I think it was last week. So, and today it just kind of popped up and then traded sideways. But with this one, the reason why I love this thing is it's growing like crazy. The fourth quarter actually reported a profit. Now, I found this article that came out yesterday, and it pretty much sums up the 3 reasons I really like the stock. One, because it did a nice drop from 90 to in the 60s, which was nice. You can get it on discounts. And its growth is just fantastic. I mean, its total revenue spiked 76% to $706 million. And its global monthly active user count rose by 37% to 459 million. And they are growing pretty rapidly overseas now, which is nice. And its fourth quarter adjusted EBITDA was 299 million. And one thing I showed, which I did in 2019 when I did the video, they put a lot of money into R&D, and it paid off, because that's why they're growing like they are. Because they spent a lot of money in R&D. Took a massive loss in 2019. And in all that development, what they did was they started getting into artificial intelligence and machine learning to improve the recommendations to its users and taking advantage of that kind of technology. And then what I like about them, unlike most social networks, they keep it positive over there, so you don't have to worry about being divisive, running people off the site, bad news, things of that nature. So it is ran differently. And so they're able to attract a lot more advertisers, basically, which is what pays the bills over there. That's how they generate their income. And then over to our friends at Tip Ranks, I mean, their price target is anywhere from $78 to $107. 2 days ago, Morgan Stanley reiterated a buy of 89. And so, they do have a lot of holds, no sales, 12 buys, 9 holds, and 0 sales from the top analysts. Let's see, yep. And so, it's got some upside to it. Obviously, after the sell-off, especially, it's growing. Make sure you watch that video at the end, because I break it down between them and Snap. I don't think either way you can go wrong for the future, but this is one I really like for growth. And so going on to one I know you're going to know, it's going to be Disney. And this one's actually had a sell-off. It's down a little bit. If you look over the last month, you can see right here it peaked out around 202 and just kind of sold off ever since. But, the good thing about Disney, it's a long-term blue chip stock, obviously, but it's also going to be a reopening play as well, because the parks, as we can see here, it says Walt Disney World, Shanghai Disneyland, and Hong Kong Disneyland are open. Paris Disneyland and Disney's California theme park resorts, hotels remain closed. And then the parks in California, they're going to reopen on April 30th. There'll be initial 50% capacity with restrictions, and then we'll see what happens from there. And the real thing that's kept this stock afloat this whole time is the Disney Plus streaming, though. It has a huge success. And on December 10th, Disney and Disney Plus subscribers were at 86.8 million, which is just mind-boggling. That's up 73.7 million from early October and 60.5 million earlier in August. And don't forget, Disney Plus is going to be expanding into Eastern Europe, South Korea, Hong Kong, and other markets coming up. The company expects to have 230 to 260 million Disney Plus subscribers by 2024. And don't forget, Disney owns Hulu and ESPN, so as sports start to open up more and things like that, then obviously that's just more revenue for them coming in. And so for me, I got this in my son's portfolio. Obviously, I have a lot of money in there, but I just keep buying 1, 2, 3 shares, whatever I can on this pullback while I can, because once the parks start opening back up and this Disney Plus is just really rocking and rolling and continues to grow and they continue to expand, I see this stock continue to go up. And, it's something just sitting in his portfolio for years to come. And so the last one is just nothing but a reopening play. And I've talked about it before, but you can go either way. Some people like Royal Caribbean. I picked Norwegian Cruise Lines because Royal Caribbean is pretty much almost at pre-pandemic levels just about. And Norwegian Cruise Lines has a ways to go. And you can see right here, pre-pandemic, around $52. They're sitting at 27. But what I really like about it, if you look at the last year, the reason why I figure I want to go ahead and just put some in my account now and just ride the wave on it to see what it's going to do is because if you look at the chart, I mean, it really, 23 is where it really has a kind of like that support level at. And so I like that. And so I figure my worst case scenario is going to be 23 right now. But best case scenario, I'm just looking to see if I can get this thing up to, within 12 to 18 months, 37, 38, maybe even $40. And so, and then I'll just sell out once I think we're kind of where we're going to be, I'll be good to go, And so this is a short-term play for me because cruises are going to start opening back up. And so, I think November 1st, the CDC set it for the United States. Europe's going to be even earlier. And so Norwegian's got a good reputation. So I'm going to go with that. But, I don't think you can go wrong with Royal Caribbean either. And if we look at their chart, I just don't feel like there's as much upside because I don't feel like these cruise lines are going to reach pre-pandemic levels just because of all the debt they've taken on. I could be totally wrong because you've seen all these stocks go up and all they've done is take on debt, And so if we're going back to the old market where fundamentals, actually matter, they shouldn't reach pre-pandemic levels anytime soon. But if we're still in this new market where it doesn't matter how much money a company's losing, doesn't matter how much debt they're taking on, doesn't matter how terrible the balance sheet looks, they're going to go up anyway, then, you could have about 30 to 40% upside on Royal Caribbean. So that's kind of where I'm at on that. That's just my thought process on that one. So, let me know in the comments what you think about that. That's just 4 I'm picking up right now. And there's others I mentioned last week, which are actually moving. Those are more high growth stocks that have been beat down very badly, and they did pretty good moving today. So, we'll see if this momentum continues into next week. We'll see if April follows the historical pattern, which us all cross our fingers it does, because I think we all agree we can use a little love out there in the market right now. And so hopefully you guys saw my that. If you did, hit that like and subscribe button for me, guys. And I will end up seeing you guys on Saturday. So have a good one.